Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. We start our analysis this week again with the light crude oil futures market, which clearly belonged to the bears this past week, as price basically pulled off the 6600 round number just around here. So we've been talking about this level in the past videos as well. So the bounce that we're seeing right now off of this market is at the 6600 level, which basically lines up as a support and resistance area for price. In the past, way back in 2010 and 11, we basically saw price bounce twice off of this area, and now that it was basically pulling back to this level from underneath, it held as resistance. We're now seeing price trickle right back down. We've also been talking about this former extremely important consolidation box, and in fact we had a long bias for this market because we were expecting for price to, as it pulls back, to basically hold as support at this former resistance area in this consolidation box here. So far, price is still pretty much within this consolidation box. As you can see, it's more close to the mid-range of this consolidation box that we've seen in the past. And we know from general knowledge about the market dynamics that consolidation boxes at mid-range levels usually tend to hold as support and resistance. Price is basically now sitting at a very important and a very interesting location, because not only do we now have the mid-range of this consolidation box that we just talked about, we also have a more shorter term wedge pattern formation in the past right here, which may also prove as a source of support for price. So just zoom this chart back in. So the wedge pattern we're talking about here is this one over here. As you can see, price was able to break past it extremely violently and aggressively towards the upside. Now that it's pulled back to it, clearly we have a bearish candlestick here with a weak close just above the 5800 level. So going forward into the following week, given that we're at a location where ideally you would expect some support coming off of this wedge pattern over here, and the more important longer term consolidation box that was posted here in the past, we suspect the price may actually hold a support here, and we could see a pullback, or rather I should say, if price pulls back to regain the upward momentum right off of this area, it really wouldn't come off as a surprise to an informed technical trader. But overall, the markets have just been weak, obviously stemming from the carnage that we've seen the S&P 500 index and the U.S. stock indices in general, and that's basically been leading to a lot of weakness for majority of the markets, and some of the safe havens like government bonds have been shooting higher over the past week, and we'll obviously be looking at the 10-year Treasury note futures market in a bit as well. That obviously posted some bullish action this past week. So as far as this market is concerned, now that it's sitting at an important location in terms of potential support, we're anticipating possibly a resumption of this uptrend off of this location. If, however, we just continue to trickle down, our next important target area for price would definitely be this area around here, just above and at the 5400 level. Obviously extremely major indications of resistance in the past here, and if price basically just continues to trickle down, we suspect that it's going to likely hit the 5400 area, and that's where we would expect some kind of trouble for bears, and possibly a resumption of the uptrend as well. But so far the bearish momentum has looked pretty strong, which kind of runs counter to our initial anticipation of seeing higher prices. We had talked about how this uptrend was very, very strong, and the 6600 level we thought would possibly not pose as much of a risk to the uptrend, but the selling activity that we're seeing now here is definitely very serious, and we're going to be looking at this very carefully. Although we're suspecting that price may actually pull back off of this level where it is right now, or maybe at a level lower, somewhere around 54-ish area. We're also not entirely ruling out the expectation that we could actually see a full-fledged downtrend develop over here. Okay, so the next market we're going to be looking at here is the S&P 500 E-mini futures market. which over the past week was able to build further on the momentum that the bears were able to post the week prior to last one. In earlier video sessions, we've talked about how this market was able to transition from a one that was uptrending in a more regular fashion, defined by more periodic but non-threatening pullbacks into the uptrend, into an uptrend that was just rising extremely sharply with little to no pullbacks at all. And we had discussed how this selling coming to the market really shouldn't surprise a more informed technical trader, because we've talked about how when price basically moves in one direction extremely sharply, it's usually unable to sustain that momentum for very long, and the market will usually be shooting for a target from where it will then reverse. And as much as we saw that phenomena play out over here when the market tipped over, we're also sort of seeing that same market play around here, where the market, after dropping extremely sharply, is also sort of pulling back to the upside again as well, right off the 2500 level. And that's something that really makes this market a very interesting one to follow for the following week. We wouldn't really be placing any bets at all in this market for this week for the short term. The reason simply being that in a volatile market like this, it's usually very, very uncertain. But nevertheless, we're still looking at these spikes to the downside on these candlesticks. And in fact, Friday was actually a bullish day for the market. So that really sets the tone at a very interesting point for when the market opens on Monday the following week. We could potentially see prices sort of start climbing back up again to potentially resume this long-term uptrend, or we could see the volatility taking prices further down. If that happens to be the case, we obviously have a next major trouble area for price at this support and resistance level. We had formed resistance here that turned into support earlier on when the uptrend was going strong. If price is really able to battle all of the buying that's coming into the market at this point, we could well see the market actually hitting right around the 2480 price point. Or on the flip side, if the bullish momentum just once again starts to take over and dominate the bears here, we could actually see prices climb right back up. There's also a third potential scenario that could play out here as well, which is that the current volatility could actually even allow price to continue chopping in a more bizarre and uncertain fashion, which again shouldn't really be a surprise at all, given that the kind of uncertainty and the volatility that the American stock indices are in at this point. So now we analyze the gold futures market, which, like the previous two markets that we analyzed, was also very bearish for the past week. So for this market, we've been talking about this false breakout where we basically had a candlestick pop out above the swing high, this important swing high over here, just underneath the 30 and 60 level, but it was unable to close strongly, or the market in general was unable to post any strong indications of a potential break to the upside, and basically using this former resistance as potential support to post a market action like this, which would have been in line with the strong bullish activity that we've been seeing this market develop in the past. On the flip side, we actually saw this candlestick close very weak, and since then we've just had a lot of bearish activity come into the market, suggesting that this move to the upside above the swing high was really just a false break. For this market, we've also been talking about this former consolidation box and how the mid-range of this consolidation box may have actually provided some kind of support for price and allow it for a platform to probably retest this level and break it on the second attempt towards the upside. We actually did see some kind of support come in at this level. If you can see this candlestick over here, it was a small bullish candlestick that showed some really initial signs of holding up as support at that mid-range of this consolidation box, but that was really all there was to it. Price was eventually just able to push past it. The next candlestick sort of posted a wick to the upside, indicating how price tried to use this level as resistance and just continued to trickle further down. In last week's video, we had indicated that if the bearish momentum continues, we could well see price actually hitting the 1300 round number support and resistance level, which is an extremely important one for this market. We've had several indications in the past of price holding up at this level as either support or as resistance, and in this case we actually held as support at this level. Once again, shouldn't come off as a surprise at all to a well-informed technical trader. So the wick to the downside on the Friday candlestick, which sort of poked the 1300 level, is really no surprise at all. Going forward in the following week, just given the fact that we're now once again in a notorious choppy situation for this market, where the market is really just bouncing off of these more near to shorter term support and resistance levels, and round numbers suggest that's the kind of activity that we're likely going to see in the following week as well. So just going forward, it wouldn't really be a surprise to see price sort of bounce up and maybe once again hold as resistance at this level, and sort of push back down again and consolidate further on until we've got more decisive price action suggesting the break either to the upside above the 1360 level or further down, well past these important support and resistance zones around the 1300 round number, and further down over here, and maybe even the swing low over here. So for now, this market is once again just gone into this choppy sideways market action, and that's the kind of action we expect this market to post even in the following week. Okay, so now we look at the Euro futures market, which we've purposely zoomed out here for reference, because we'll be looking at some more longer term areas in this chart to make sense of what price is trying to do as of now. So the prior week we talked about how this market was able to print a strong looking bearish pin bar or hammer pattern right off of this 1.25 round number support resistance level formed by this by the indication of support here that turned later into resistance when the market was basically downtrending, and now the market is basically pulled back to it from underneath. It was using this level as resistance, as indicated by the strong looking bearish pin bar pattern. Although looking at the momentum that we'd seen from the bulls, we were suggesting that price may actually continue dragging towards the upside, more closer towards this more important and significant former support level around the 1.27 to 1.28 level, marked by all of these important swing lows that we've had create off of this level back in 2012 and early 2013. On the flip side, what we saw over the past week was the bearish pin bar sort of working out as price trickled towards the downside, and it's, as of now, it's inching closer and closer towards this level, which is going to be a very important and very significant level for price, because actually if we drag this further down, it also lines up with a very, very important swing low for this market from way back in mid-2012. So just looking at the momentum that we have from the bears here, we are suspecting that price will probably just continue trickling towards the downside here, especially now that there's really not a lot of possible support options for price in this range around here, which should really allow price to just continue moving down and basically hit this level that we've just indicated here. Zooming back in to see the more candlestick to candlestick price action, here's the pin bar that we're talking about. You can see that the high was actually not nullified, although there were indications of it in the week prior to last one, where we actually did have some bullish activity come in, and that's what had basically got us anticipating that we may actually see price sort of trickle back above the high of this pin bar to invalidate it and just continue pushing a little bit higher, more closer towards the 1.27 and 1.28 important and significant support and resistance levels. So you can see that really never happened at all. Price started to trickle right back down. We broke this initial trouble area for price marked by this high over here and the low over here. We had a very strong close underneath the level, and the last 2 days basically printed off price action that was more neutral. And so really we're expecting that even if price sort of pulls back again, this level over here will probably hold as resistance and allow price to continue trickling down more closer towards the 1.2 big round number that's lying around here, and of course the long-term support and resistance level that we earlier marked out. Okay, so finally we look at the 10-year Treasury note futures market, which very unsurprisingly was bullish last week, mainly from the fundamental perspective, but also from a technical perspective. Just given the broader weakness in the US stock indices, it's normally expected that the safe haven investments and instruments like the government bonds and Treasury note Treasury note markets will usually take off, and that's basically been the prime reason why we've had such a strong spike to the upside here posted in the last week. Also, from a technical perspective, even though we've had a short bias on this market since we've seen a very strong breakout of the price level around here, we noticed how we had a very, very strong support zone. That price broke through, pulled back, held as resistance, and just continued its way down. And this breakout led us to believe that we were likely going to be seeing price levels much lower. That was mainly before the very sharp sell-off in the S&P 500 index that we witnessed over the past week. But also, we noticed that even though we've had a short bias in this market and we've been expecting prices to go much lower, we've also been identifying this former consolidation box as a source of potential support for price as it meanders through these important price levels and basically approaches the 120 major round number that's sitting just underneath this the top resistance level of this consolidation box. And as you can see, a bounce right off of here is really not entirely a fundamental drive. From a technical perspective too, it makes total sense. Although we were just expecting for price to sort of at least push a little bit lower and maybe eventually end up testing the lows around here of the consolidation box. And that perspective isn't exactly ruled out as yet. The reason for that is, even though we've had a strong spike to the upside this last week, it's important and interesting to note that much of that act was capped at the former support zone that we broke earlier on a few weeks ago. So we've had this extremely important support that turned into resistance here, and it continues to act as resistance. As you can see, the bullish spike that we saw here kind of just capped out at this former support zone, and that turned into resistance again. And once again, we're seeing price sort of trickle down towards the downside again. So if this bearish momentum sort of builds on the following week, we could actually see price once again just continuing its way back down. But again, a lot will obviously depend on whether the S&P 500 index recovers at all, or we see more bearish activity there. If we continue to witness a sell-off in the S&P 500 futures, we might as well see another push towards the upside here, again to this important level here. And whether this level holds as resistance or continues to hold as resistance will be a very key factor in allowing for this downtrend that we've seen develop over the past couple of weeks to just continue. Otherwise, if we see a push right back above this level, that could pretty much be a game over, in the sense that this whole move down here all the way back up could then prove to be a false breakout underneath this important level. We could then see price probably pull back to this level, hold as support, and we could see price again continuing on its way up. But all that will really probably be fueled by a continued sell-off in the S&P 500 index, which may or may not happen. So a lot for this market continues to be uncertain and will really just depend on how the broader market activity unfolds and how this particular market behaves as it basically bounces off of this important level over here that's already marked, and as it approaches the 120 round number, and how it basically behaves around the former consolidation box that we just saw.